My name is Oliver Mohsenihow. I am one of the co-founders of Froda. Since 2 years back, focusing entirely on what we call embedded finance. So enabling partners to offer SME funding to their clients, basically, or customers. You could probably interpret it a bit different, but for me at least, it's when you embed some kind of financial service in a non-finance platform. So it could be in a marketplace, you may have different kind of payment functions. The fact that you can pay your Uber in the app is a typical example. And for us, it's very much about kind of using our core capabilities around micro business lending, which is our core product, distributing that in different partner settings. So it could be a neobank offering lending to their SME customers. It could be an accounting software or a payment company. So then we embed the financial service into their customer platform. When we founded Froda, we wanted to solve some kind of problem. So actually we founded Froda around a team, a bunch of friends that really wanted to do something together. And we looked at this idea from North America called Merchant Cash Advance, where you try to tackle the problem with small business financing by looking more at cash flow instead of balance sheet. And the idea was, could we do something similar in the Nordics and in Europe? To try to figure out if that was a good idea, we actually went around in Stockholm knocking on doors to restaurants, cafes, small retailers, and found out that this is a huge problem. They really have a tough time with the high street banks. So getting external financing to enable growth of your business is really difficult. Reading up on it, we realized this is a problem in all of Europe. It's also a really important sector to help because they're creating like 80% of all new jobs and also lots of the tax revenue that's generated. So enabling healthcare and all that is from the small businesses. And still they don't have this kind of essential infrastructure to be able to invest. So that was kind of the trigger to do something. The problem with the bank is typically that it's a bad match. The bank has a solution that fits really well for bigger companies, and one of the reasons is how they credit score. So they would be looking at the balance sheet, looking for a material security. So something that they can have, like a real estate or a really expensive equipment, and then they can lend towards that. The small companies typically don't have that asset. So what we do different is that we look very much at cash flow, and then our machine algorithms would project that, well, based on your historical cash flow, we think that you're going to have this cash flow in the future, and then we lend towards that. So it's like an advance on your future sales, if you want. In that way, it's similar to factoring. The problem with factoring is that it's really short term. So it's cash flow management, but only for like 30, 60 days. If you want to invest, so you want to buy more goods for Christmas sales, then you need a little bit longer time. It could also be that you want to invest in your venue if you're a restaurant, or build a terrace now during the spring. You don't want to pay that off in 30 days, so you need a year or 2 or 3 years to pay that off. And that kind of investment was really difficult for the small businesses to do. I mean, what we've seen is that if we look at the cohort that actually uses Froda, compare them to kind of a similar random group of businesses, we can see that the ones that invest grow like 7 to 8 times as fast as the ones that don't invest. And I think from a business it makes sense. All bigger businesses have debt to accelerate their growth and to enable their investments. So that's kind of what we're trying to achieve, to make that possible also for the small businesses. Froda's main offering is SME lending, and it's actually the only thing we do. We focus 100% on that. The idea is that if we do one thing, we can do it really well. And what we want to achieve is to have really the world-class SME lending product. For us, SME is typically micro, So most of our customers are the smallest ones. And that group actually makes up about 95 to 99% of all companies, depending on the geography you look at. So it's a huge group of companies. And a typical Froda customer would have 1 to 5 employees. So it's everything from the really one-man shows and the first couple of employees. So that's where we focus. That's also the group that has the hardest time finding external financing. And the way we try to tackle the problem is, since they're small and then thus they also need smaller loans, it has to be 100% digital and automatic. There wouldn't be profitable to do it as the high street bank, where you have a credit committee that sits and takes decision on all the paperwork. So that's one of the things that we built. We made it 100% digital, automatic decisions in real time. Benefits us, but also benefits the SME. So basically, as an SME, you log into Froda or our partner, and within like 7 to 15 seconds, you know what's the available credit for you. You don't need to share data with us. We pull data from different sources. And then you can choose to use all or parts of that, or just knowing that you have that funds available if you would do an investment in the future. The most motivating part for us at Froda is when our customers succeed with our lending product. What's really cool is that we can do it for these small businesses, and it's typically, it could be like 20,000 crowns. We had this florist, she invested, I think it was Halloween or Valentine's. We enabled her to buy more flowers for that weekend. And we tripled, or we didn't do it, but she tripled her sales with this really tiny investment. But it meant so much for her. And then she came back, and this has been a way for her to grow, and the ticket size is increasing because her business is increasing. And then she can employ people and she can grow. And I think that's the real success of what we're doing. When the group of us decided to move into finance and try to challenge this sector, we wanted also to be doing good. One thing was, of course, focusing on this segment, which is really underserved and really needed this kind of service. But I think the other thing was that we wanted to have joint incentives with our customers. So not making money from late fees and things like that, actually making more money on customers that do well and less money on the ones that struggle. So that was important for us. So there's no fees, and you have one fixed cost typically with the most common product. If it would take you a couple of weeks longer or a month or so, it's still the same fixed cost. So then you become a little bit less profitable. But I really like that setup where we are having these joint incentives. I think one pain that many customers also described in the beginning was the bank says no and you don't know why. So we also try to give feedback, even so in some cases also we have to say no, but then try to give them feedback. This is the reason. If you fix this, you're welcome back in 3 months or 6 months, or what we need. So they know what's kind of the hiccup, and they have a possibility to try to fix that. One of kind of the core data sources for us is open banking. So we use transaction data. That's how we figure out your historical cash flow. And also from that data, we can find other behaviors or transactions in your business that would affect the credit decision. So we can see if you have other loans. We can see risk behaviors like gambling or whatever. Using that quite rich data source enables a much better scoring, and in particular for this customer group. It requires some kind of machine learning because it's an unstructured data set, so we need some way to kind of make sense of it. Everything is fed into the credit algorithm together with classical credit data. So we also pull credit bureau data and so on. But this is all done with APIs, which then makes it quick because there's no person taking that decision. It's all based on data, and all the data is basically available in seconds or less. We definitely see different ratios in spend towards revenue, and we can from that deduct, is this business viable or not? So you can find a lot of cool things in this data, and it is, as I said, it's very rich. It's super valuable to use in the credit scoring. I think the foundation of Froda is to collect data in a way that's convenient for the customer, but also really enables us to score these small businesses, because it is difficult using traditional kind of high street bank ways. So for us, one of the biggest kind of cornerstones in enabling Froda to grow and score these small businesses is open banking data, which we retrieve from enabled banking. And with that data, we see how the business is doing, and we can then also predict how will this business do the coming years. And from that, we then know how much can this customer or company lend and keep it sustainable. I think one of the side effects also from leveraging data and only data, and not requiring a lot of work from our customers, in addition to, of course, saving customers time, is that the scoring becomes really objective. So it's only based on your company figures, the scoring with us. It doesn't matter how good you are at Excel or PowerPoint, or if you're a young girl or middle-aged white man, you will still get the same score with Froda, because it's only based on data and figures. So in a way, we're actually democratizing capital, which is really neat as well. There are several aspects to that. So it's some things we have implemented. So the fact that we can give them a little bit hints on how they can improve their credit score. I think we can do much more there in terms of, okay, how can we help you become even more creditworthy? Since we are assessing your company data, we could actually give that as an extra service. There's more to be done there, I think, from our side, but it's really an interesting way to create even more value, I think, for our customers. When it comes to open banking, being focused on only companies has been a bit of a challenge, because most of the open banking providers are more focused on consumers. So enabled banking has been really great in that sense, that you also have a good focus on business accounts. We met, I think, colleagues from enabled banking at different conferences and started to network, and that's how we kind of got connected and kept in touch. I think just for that reason that we felt there was a good match in the focus on businesses. We also saw that you had a good coverage in our markets, which is Nordics and also growing into Germany, as are we. I actually talked a bit to the tech and product team as well, and they're really happy with the agile support and the fast replies, and working with you guys has been really great. I mean, I think AI is going to affect all sectors, of course, in lots of ways. I think for us, AI is super valuable in making sense of the unstructured data that open banking gives us. So that's, for us, going to be a real game changer, I think, to use more and more AI. And then, of course, there are some challenges around AI. It's kind of a black box still. So in all, I think huge possibilities going forward. From a geographical point of view, I think the problem that we're addressing with finding external financing for small businesses is the same in all of Europe. So Europe is where we want to go. We are scaling out in continental Europe now, and we want to continue to do that. So I think in 5 years, I would see us in most of the EU, servicing SMEs and enabling them to grow and enabling them to realize their business ideas. In Sweden and some European countries, it's a bit shameful to lend. I get that from a consumer perspective. As a business, you have to think differently because this money is just an enabler, and this money is not spending, it's really investing. So you have to, of course, make all the calculations. Is this a sensible thing to do? Will I have good returns on this investment? If you think you have the idea how to kind of leverage that money and make even more, you should definitely consider a loan to accelerate your growth. And I think also look at different options. So a lot of us think that the bank is the only option, but there are coming more and more alternatives, and be open, look around, compare. I would say it's super simple. So basically what you need to do is log in to our portal, our customer portal. We will tell you directly in seconds how much you have available. There's no strings attached. You can just log in because you're curious. You will know how much is available for your business to invest. That would be my first thing to do. So there's no cost. It will take you less than a minute, and you know the terms that we can offer.